please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now there is a bit more of red on the screen. We thought that the mid caps and the big caps will find some bit of their feet after the initial bout of selling when the markets opened higher, but actually things are getting a little more negative for the bulls and positive for the bears. 120, 130 down now on the mid-cap index, 2/3% lower, and the Sensex and the Nifty are practically in red terrain at this point in time. In fact, all the three indices, Sensex, Nifty and the Nifty Bank, are in red to flat terrain. Well, one of the niggling worries for the markets is the investigation arm of the Revenue Department now sending notices under the GST anti-profiteering law. Three entities have already been, we are told that's in the public domain: Hardcastle Restaurants and retail shopping outlet Lifestyle, as well some of the stockists of Hindustan Unilever for not passing on the benefit of cost reduction to consumers. Sunil Dugal, CEO Dabur, and MS Money of Deloitte India are joining in to tell us whether this is something that's more worrisome. Mr. Dugal, you're not one of these guys who are affected by these notices, and that's why we wanted a neutral note from you. Is there something vague about the rule that there can be witch hunting? Is it difficult to implement a price cut?
Well, there's nothing vague about the rule. The contours are pretty clear, but the implementation is very hard, especially for FMCG products of very low value. And sometimes, one law conflicts with the other. For example, let's take a shampoo sachet. Now, logically, we should price it at 90 paisa, but then another law doesn't permit us to price it at 90 paisa because there's no coinage to support that price. So there is a challenge in implementation, and I think it's not just the company which is culpable if there's any violations. The entire trade channels. For example, we can do a price cut, but if the retailer doesn't pass on the price cut to the customer, there's not perhaps too much we can do about it. And I think the scrutiny should be on every aspect of the whole distribution chain as to where non-compliance, if any, is occurring.
Okay. Mr. Mani of Deloitte is also with us. So let's get his view in on this. Mr. Mani, what is your own view on the possibility of loopholes in the distribution chain and the allegations that the benefit of cost reduction is perhaps not being passed on to customers?
I think this has to be looked at each part of the supply chain, because for someone to make a sweeping generalization, as I understand some of these recent notices have made, that the price cuts have not been passed on, would be very difficult for them to establish. Because while the section in respect of anti-profiteering, which is section 171, is very, very clear and is very unambiguous in terms of its applicability, what we still don't have is any kind of a mechanism to determine whether the price cuts have been passed on or have not been passed on. So I will not dwell upon, the aspect of dual legislation pulling in different directions, which Mr. Dugal mentioned. But even if it is only one legislation which has to be complied, at any given point of time, every retailer, every wholesaler, every stockist will be having some existing stock and some past stock. If the stock that he has is already duty-paid stock, as we refer to it in the trade, meaning that the retailer has paid a higher rate of duty, to the distribution channel from whom he has procured it, how can he pass on unless he in turn is passed it on by the, other retail chains?
Sure.
So therefore, to my mind, this is more of a technical issue actually requiring a proper investigation. And if there is any wrongdoing, yes, there should, certainly steps be taken. But a generalization that it has not been passed on or it has been passed on would be very difficult. Would depend on the business, on the industry, on the value chain, etc.
Well, Mr. Dugal, I got your coinage argument. You can't today pay 90 pice. Those coins don't exist. But what was the other? What is this double legislation you were saying?
No, what I meant was that, for example, stickering, what the government said that you have to sticker every SKU in the market. Now, obviously, that's impossible because you're talking about tens of millions of SKUs in the FMCG sector. So we did attempt to sticker as much as we could. I must admit that it was obviously not 100%, but we did do a fair amount. But then what we did was we took out extensive advertisements in newspapers to educate the consumer that these are the price cuts. in a sense, trying to forestall the fact that the retailer may not pass on the full price rebates. But yes, I agree with Mr. Money. There is ambiguity in terms of date of manufacture, in terms of how the trade, perhaps tries to take advantage of this situation. But on our side, I think we have passed on every last paisa of the GST cuts, both in July as well as in November. And we have advertised extensively. We have done a reasonable amount of stickering. So I feel that we have been as compliant as we possibly could.
So would you say this is a passing problem, Mr. Dugal? I mean, okay, there was one cut. Now it's over and done with. Maybe there'll be here and there some notice, but it's a very marginal problem for the industry.
No, it's not a marginal problem. I think the problem is not going to go away in a hurry. For example, when do we start taking up prices? Because inflation is now kicking in. Oil prices are trending up, and we see an inflation cycle coming in to play in this quarter itself. So there'll always be that little bit of anxiety as to when do we take up prices, by how much, and we'll obviously have to prepare a full dossier in terms of justification of the price increase. But I think this uncertainty will remain this quarter at least, and I hope it'll perhaps end there and not spill over into the next year.
So bigger companies like Dabur, HUL, etc. are, making that effort to sort of convey to the customers through communications via ads, etc. But is there any viable mechanism to determine how some of these smaller companies could be passing on the price cuts, or whether they are passing it on or not, Mr. Dugal?
Not really. I mean, the billing prices will be the only indicator, and if they are reducing the billing prices to the channel members, then in a sense they are passing on the price reductions, and then the channel members are culpable in terms of any violation. So there is a trail which the government can, or the Anti-Profiteering Bureau can track. So, but it cannot be ensure compliance at all levels of the supply chain.
Okay. Mr. Mani, would you agree with Mr. Dugal that the draconian element of this law is just this fear psychosis that it seems to have engendered or triggered, that even legitimate price increases now the industry will be afraid to take?
I wouldn't say it is draconian. All that I would say is that a strong law needs to be supported by very strong and clear implementation rules. To give you an illustration, if the rate of tax on a particular product has gone down from a particular date, in this case 15th of November, how can trade be expected to reduce the price at the retailer level from 16th of November or even 20th of November? Because it takes a month for the product to come to the shelf from the manufacturer.
Fair point.
And most of the stock which is already lying is, as I said before, duty-paid stock. Now, while in case of a restaurant which has got a shorter life cycle, there could be an expectation, depending again on the nature of the restaurant. In this case, one of the entities you mentioned is Hardcastle, where I believe some of their ingredients are procured months in advance. So they would have already paid the higher rate of tax on their input. All that they can do is that on their output, if there is a benefit which they can pass on, they should certainly be passing it on. So there has to be some kind of a timeline specified, is what I look at it, to say that if there is a tax cut from a particular date, within 30 days, within 45 days, depending on the business, prices should go down uniformly everywhere.
All right. We'll leave it at that, Mr. Mani and Mr. Dugal. Thank you very much for stopping by and elaborating all the nuances of this issue. Mr. Mani thinks that it's an operational issue which perhaps can be clarified with better rules. But I think what stays with me is what Sunil Dugal is telling us, that there is a fear psychosis. And price increases will come now, because you can see inflation, fuel price inevitably gets into other products as well. And FMCG companies may have this problem, probably being in the clutches of an Inspector Raj, having to justify every time a legitimate price increase is taken.
Okay, well, let's get back to the markets now. We have our tech gurus back with us, Ashwini Gujral, Mitesh Thakkar and Rajat Bose. We just spoke to Ashwini a while back on account of, on the kind of fall that we've seen in the market. Ashwini, mid-caps are cracking further now. All these beleaguered names, that we were talking about, not just Relcom, but Rel Power, JP Infra, JP Associates, etc. What do you do?
See, obviously, these guys are not great long-term investors. So the moment you get the first, jerk, they'll all take their profits and run. So that way, if you can see, RCom is now down 6%. Reliance Power is down, I think 4% odd. So these are stocks where people have profits, and that's where it's going to get taken. but probably the first fall of the day is now done. I think we should see whether further decline also starts to come in. But I think if it comes, the mid caps will fall harder. So again, people have an opportunity of getting off some of the leverage mid caps or where they have futures positions, because market hasn't recovered at all. And we were like 1200 advances to like 200 declines earlier. That has totally reversed. That just shows you the intensity of selling, and all sectors other than like 5 are now in the red.
Okay, so Ashwini, should an intraday trader consider the morning low 10,430, not a big distance from the current level, as sacrosanct at all, or do you think we should even short at these levels because we are not rising despite every help from Asia?
Well, Asians are often not very helpful.
Today they are. Okay, yeah, go ahead.
See, yesterday's action of the last 1 hour started to expand the very narrow range that we were traveling in. Today's action has further lent strength to that expansion. The market is now expanding on the downside. So just today being the second day, first hour, you can be confident that there is more expansion on the downside. So I don't think lows are going to hold for too long.
Okay. Mitesh, morning again. Your thoughts on the first hour? It's been very interesting. Been a bit brutal for the bulls, considering from the high point we have fallen quite a bit, especially in the mid caps. How would you approach the rest of the day?
I think, Anuj, yesterday's, I think, the intraday chart as it shaped up was indicating that there should be more supply, and in fact the SGX did totally go against it, possibly backed by the Hang Seng, but I think very clearly the overall setup is coming into play again. So I think today could be a choppy day, but I think overall it would be wise to look at shorting on intraday rallies. I think we might still have some more choppiness left during the day. For the timing, I have one buy and one sell call. Dish TV is a buy with a stop at 83 for targets close to about 94, 95. And iShares has already declined a bit, but still a sell. So if you get during the day sometime around close at about 29,350, 400, good levels to go short with a stop at 29,700 for targets close to about 28,500.
Okay, actually that was my next question actually. On the index, some of these stronger stocks are leading the fall. Yesterday TCS ended at the low point, is at low point right now, and iShares Motors as well.
That's why you would think that the big institutions are selling, because these large stocks are owned by institutions. So if they are taking the view that the market needs to come off, then sooner or later all these cats and dogs, everything will fall.
Okay. Yeah, we need to just pull out iShares and TCS. Yes. Both those stocks are marquee stocks which did see selling, and then yesterday, as we noticed, there were delivery-based selling in several of the big stocks. But Mitesh, would you, the stocks that you refer to are the big, better ones, like iShares. Would you want to take any short positions in all those, leveraged stocks that were rising? Say GMR, of course, Ashwini spoke about, but all the JP companies, the other Reliance companies. Any of these, would you want to take short positions now?
Not really. Okay. I think the only reason I'm avoiding them is very clearly, I think, I don't think I got a clear hang of what's happening around. I think these stocks have risen much beyond my expectations, and I think, they are correcting, but they can again keep going up. I think some news flow will keep on happening and might, play around with your trading position. So I would rather, go for stocks when there's some kind of a clearer trend emerging in the short term, and Bank Nifty and iShares, I think, are clearly prime candidates for having the short exposure.
Let's see if we finally can show iShares Motors third time lucky PRs. Also, India Bulls Housing is a stock which is struggling a bit right now at the low point. Ashwini, a word on metals as well. Vedanta, Hindalco. Yesterday these stocks looked good in late trade, but today again seeing a bit of a decline.
See, in this sort of environment, it'll be probably taking profits off on almost everything. So I don't think metals are going to be saved. You can easily have a 10-15% style correction even on the metals stocks. The way our market is coming off, it's probably trying to price in some sort of global correction also, which is likely in the next few days or so. But right now you should be hands off and take profits off, at least if your stocks have run up vertically.
Okay, Rajat Bose is also joining us now to give us some stock ideas. Rajat, all three indices are now in the red. Mid-caps are down to the lowest point, down about 1%. What have you made of this fall, and what would be the stocks to look forward to?
See, first of all, I would say that if 10,400 were to be broken by the Nifty, then you can expect 10,340 thereabout. And unless 10,340 to about 10,300 gets broken, there wouldn't be any further fall. And at the same time, you need Bank Nifty to fall the critical levels between, say, 25,270 to about 25,200. This is a range that needs to be closely watched. If this gets taken out by the Bank Nifty, then you can expect 25,000 to be retested, and maybe even downside break can happen. Regarding the mid-caps, I would say that it was only anticipated that at some point in time this huge rally that was going on would be corrected, but we can't still say that the downside has really begun, because we have seen such one-day corrections, and unless this one-day correction gets actually strengthened by more selling going forwards, maybe tomorrow or day after, then you will see mid-caps, at least in pockets, will continue to perform. And regarding the stocks, I have, like Mitesh, one sell and one buy. I'm buying ONGC. 196.25. My stop loss is below 193, and target would be 199 and 202. And Petronet I'm selling. 256.10 is my stop loss. 250 and 248 are the two targets that I have on the downside. Petronets look weak to me.
Okay. Thank you very much, Rajat, for joining us with your thoughts. Now the mid-cap index is down 1%. So clearly the selling is accelerating and gaining ground. The Sensex and the Nifty, which were flirting with flat terrain, can now be considered down today, down by about 0.1, 0.2%. That's a fall of about 41 points on the Sensex. But from the day's high, that's over 100 points lower for the Sensex. So there is definitely trouble afoot at this point in time. The advanced declines ratio have expanded. 3 stocks in the green, in the red now, for 1 in the green. So clearly selling accelerating. For one last time, Ashwini, the further shorts can be added on the Nifty?
See, the frontline indices are not showing you the full extent of the problem. Nifty is down only 16 points. But now 1230 stocks are declining and only 358 are advancing. So, you know, probably the market is not falling as much so that the mid caps can be sold. Okay. That's what I'm saying. By the end of the day, I think mid cap, large cap, everything will get decimated.
Okay, and you think Ashwini, Rel Par can still be sold? It's down 6% right now.
6% is nothing, you know. It can probably still fall another 15-20%. So easily all these, you know, GMR, Relcom, Rel Power, Rel Naval, whatever, all of these guys can be sold.
All right. Well, we will keep coming back to our technical experts. Thank you very much, gentlemen, for joining us with your 10 a.m. trades. Some bit of the trouble, of course, has been caused by crude going above that $67 mark. Manisha is joining us with a roundup of the early commodity trends. Good morning, Manisha.
Thank you so much for that, Lata. Well, a second straight day of gains, and this year is what we are dealing with in sense of commodities. The crude oil prices, as you mentioned, are holding around those 2.5-year highs. So 60 in the US crude and 67 for the Brent is how we are trading in the global markets, and we are a percentage point up as we open trade for the MCX here as well. While, of course, there could be some concerns as the premium would go off, as you have seen the Fortis pipeline now fully back functional, and the Libyan pipeline also is seeing repairs. But the other point really is, even as markets have been holding on to crude, thinking that the US shale output growth will continue, that doesn't really seem to be the case, because the investments in the last 3 years have been on the lower side, and at these current prices of crude, you aren't really seeing that kind of a growth in US discoveries. The latest data shows that in 2017, the discoveries, the new discoveries in rigs and drilling machines, etc., has been at 7 billion barrels, which is the lowest since 1940. And with the kind of demand estimates that we are working in for at least this year and the next, there is some support more coming in for the crude oil prices. Take a look at the US dollar, and that has started this year on the weaker note as well, and that has been supportive for the gold and silver prices. So we have opened this year above $1,300 per ounce, and that has been giving all that needed support for the gold prices as well. The Chinese manufacturing data today has come in on the positive side, but you have the manufacturing data slated to come in from Europe, to many European countries, Germany, etc. as well today, and that is what the metal market will keep reacting to. But most important, of course, is Asia. Copper, for instance, 2/3 of copper global consumption comes in from Asia. So whatever data comes in from here, the equity market reaction, etc., all of that will weave its way into the prices. We've started quite flat on the weaker note, as has been the case in the global markets. What is doing well today is the steel prices, up 1.5% in Shanghai, and that reaction, of course, can be seen in zinc and lead. Trading strategies, and we have them from Angel Commodities today. They have a bullish view coming in for the Indian rupee to start with. They expect the Indian rupee for the Jan future, that is, to gain up to 63.70 today. They also have a buy call across commodities. Natural gas prices, they expect the prices to gain up to 197. They also have a buy call coming in for silver prices, where they expect to see prices at 39,700 today.
Okay, Manisha, thanks a lot for that. So that's the commodity corner.